All right. Well, hello and good morning and welcome to our Simply Tax Talks for March 22nd here. I did look down at the calendar, actually. I almost had a moment of like, is it really March 22nd? But I can confirm by looking at my computer, it is in fact March 22nd. We took a few weeks off here to focus on the tax season, and that's really what we're going to be talking a large part about today. And I'm really excited to be joined by Melanie Lauridsen of the AICPA. She's a senior manager and going to be talking about a number of things, but some of the IRS Service Challenges. And I'm also excited to have Tad Guttenbauer back as usual to give his takes on everything going on in the tax world. So welcome to you both.
Good morning.
Thank you.
All right. Well, let's just go ahead and jump straight into our top tax topics for the day. All right. So as I mentioned, it probably bears no background, but I'll mention that there's certainly been some challenges that we've faced, that the IRS has faced, and it's number of challenges that have stemmed from a number of reasons. But I guess as a result of that, that's what I would like Melanie to kind of break down a little bit for us today. So Melanie, I guess maybe could you give us a little bit of a background on the situation and some of the challenges that we're seeing and maybe what caused them in the first place?
Absolutely. But let me also kind of paint the picture for you so you understand how we got here. So back in 2015, we started to have and hear from our members that there were IRS services challenges, and the AICPA actually put together a council resolution on tax administration where they wanted the IRS to become more modern functioning and be able to really serve the taxpayers. Back in 2016, we started an annual member survey of all those experiences that the people are having with the IRS. And each year we launch that survey immediately after the filing season, so it's still very fresh in their minds and they can give us more raw feedback. And the thing is, in theory, the 2015 tax year was the low point for the IRS. Supposedly, that was rock bottom. And that's when Congress got involved and they started to give the IRS a little bit extra money for them to answer the phones. And we did start to really see a trend upward where the services were beginning to improve. And so things were moving in the right path. And, you guys have heard of the Taxpayer First Act. The very first stage of implementation had happened with Taxpayer First Act. So things were looking really hopeful. But then, as you're aware, and everybody in the world is aware, in 2019, COVID came along. It hit the IRS just like it hit everybody else, and it really took its toll. What was really unexpected was the 2020 tax filing year, which was 2021 year, was actually worse than the previous year. And that really just had to do with the fact that the IRS was still trying to catch up with the backlog, which was bad for the 2020 tax year. And then 2021 tax year was worse. And now we're entering a third filing season where it's gotten progressively worse. And it's been terrible for our members.
Yeah, it certainly has. And I'll just share from my own firsthand experience. And I mean, it's certainly a challenge for them, because there's a number of factors at play, like you just mentioned. But how did the pandemic and all of that really compound the problem, you think? And why do you think 2021 really ended up being, almost in many respects worse than the 2020 tax filing season?
So a lot of it has to do with the backlog. A lot of it has to do with the IRS's inability to communicate with the taxpayers. So they had to, and they rightfully did, they stopped collections activities, right when COVID hit. They had to shut down. They had a lot of issues, and they also had problems struggling to get back open. But during this time frame, people still had to file their tax returns. And even though we did get an extension, it was still due. And a lot of people, the taxpayers, they had a lot of changes in their circumstances and lives, whether it was their jobs, the types of jobs that they took. A lot of changes happened in their lives, and people started to have a lot of questions, and they started to reach out to the IRS. And I don't know if you've heard or seen those statistics, but at one point the IRS was answering 2 to 3% of all the phone calls that they were getting. Now, the IRS does have reports, and they have reported 14% was the number that they were answering phone calls, which, by the way, 14% is still terrible. But that 14%, also included people who would call and would just hang up. They considered that as an answer rate. And then they would also, it was the people who just were on hold and got disconnected. That is also part of that 14%. So when you look at the true number of people who were able to get through to the IRS, it's 2 to 3%. And I've actually had some people joke, if the number is that low, the percentage, why even bother answering the phone? What's the difference between 0 to 2, right? And then you've also heard by the IRS's own accounts, they had 1,500 phone calls per second. That's a lot. That's a lot for them to handle. And when you start looking at it, it became so bad from the backlog where they didn't have that information and people needed to answers to their questions, and they were calling the IRS and there was nobody really there to pick up the phone. And even if by some miracle you could get through, they didn't have the information on hand to be able to help you. So it escalated and it got to a really bad season. And then we're in even a worse filing season now. So this is the third filing season where things, like I said, have just gotten progressively worse.
Yeah. And I'll say too that when you do get through, and I'll give this as a compliment too to the service, that oftentimes you just kind of feel bad for the representative on the other side because they don't have the information. They're kind of at the mercy of the system and whatever it says, which is usually saying that they're kind of waiting on things. Is that kind of what you're hearing from members and those that you're speaking to?
Absolutely. It's so the word that I use, what people are feeling is despair. Right. And like you said, the IRS themselves don't have access to all this information. So you're calling, and if you're calling them, it's not something that you could do a quick Google search and try to figure something out. We're not calling because, we need to know if we can take this as a charitable deduction. If you're calling the IRS and our membership of the practitioners, it's because the only person who can provide an answer is the IRS. And if their systems aren't updated and there's a return from previous year that feeds into this year, a refund or something like that, and they can't even provide you basic information on a return, there's frustration. And there's frustration on the IRS's side and there's frustration on the taxpayer side. It's just not a good situation.
Right. Yeah, you're right. It kind of just fuels itself. It's kind of almost like it's like a snowball type of effect almost.
Right.
And certainly some of the emotions that can run from that and some of the stress that can come from, I know a lot of taxpayers sometimes will share with me they feel about filing their taxes or figuring out why there's an issue, that it just tensions run high, I guess. But I know that the AICPA and a few other organizations formed a coalition to kind of maybe make some recommendations and see what can we do about it, I guess. Right. And so, acknowledging that we have the issue. So maybe could you talk a little bit about the coalition and I guess some of the recommendations?
Absolutely. So a little background on the coalition. It's 13 different organizations from all walks of life. So we have representatives from, the low-income taxpayers, the VITA clinics, and then CPAs and practitioners. So it runs the gamut. It runs diversity. It shows you that the problem with IRS services is not unique to CPAs, but really across the entire country. I also have to say that all of these organizations at a different moment in time, and I know for AICPA, we've been reaching out to the IRS for over 18 months, trying to get some sort of penalty relief. And what we ended up finding from our studies, which is not unique, like I said, across the country, is that a lot of the reasons of why people needed to reach out to the IRS had to do with notices, liens, and levies. And we were telling the IRS relief was needed in these areas, but the other organizations were also reaching out to the IRS, and it kind of was falling on deaf ears. And when we started this filing season, once again, it was bad. It was just really bad. And so when we reached out to the other organizations, the coalition came together naturally because this is what everybody was fighting for and needing from the IRS. So we all agreed on 4 recommendations, which to be very clear, the point of the recommendations is not about the penalty amount. It's about reducing the need to reach out to the IRS. So one less phone call, one less stressor, one less erroneous notice, which would relieve, those emotions that the taxpayers are having, but also the IRS then can focus their resources where it's really needed, which is eliminating the backlog. So we have 4 recommendations. The first one is to temporarily discontinue automated collections activities. The second one is for the IRS, and this one is like, it kind of makes sense, but isn't happening, is to align account holds along with the time it's taking them to resolve a penalty abatement request. They should be tied together. Right now, they're not, and it's requiring people to call the IRS again to extend account holds until the IRS is able to resolve that request. The third one has to do with reasonable cause penalty waivers. As you're aware, reasonable cause requires paper filing. When you have a paper backlog, it just adds in, it becomes a catch-22. So streamline it, make it simple, make it like the first time abatement, but preserve people's first time abatement. COVID has impacted everyone. And if there's ever a time for the IRS to offer some sort of penalty relief, this is it. A pandemic is it. And the final piece has to do with targeted relief for underpayment and late payment penalties for 2020 and 2021 tax year.
Okay. So are these recommendations that the IRS could implement? Or, I mean, obviously there's laws and legislation that has to be enacted and so forth that governs the rules. But I mean, yeah, is this kind of within what we think the IRS has the authority to actually do?
That's a great question. And the answer is yes, absolutely. Okay. We believe every single one of these recommendations is within the ability for the IRS to implement it and to implement it now.
Okay. And so I guess maybe that's gonna be my question is what have we seen so far from because I mean, the recommendations seem kind of right. You're more, if you're thinking about like in the health context, right? It's saying, all right, well, let's not just put a Band-Aid on it. Let's like actually try to solve the ailment in the first place. Right. So yeah, are we seeing any movement on the recommendations or any improvements?
So what we've seen is the IRS has temporarily stopped some automated compliance actions. And to be very clear, we absolutely appreciate that they've done this. And it does help and it does make a difference. So we are moving that needle in this area, and that's great. However, more can be done and more needs to be done, and it's within their ability to do so. And I go back to the other three recommendations that the IRS can offer and they can do. And I do know that they're having conversations about it, but the clock is ticking. We need relief and we need it now. We don't need it after filing season. So we're still pushing.
Yeah, no. So I guess if, well, maybe ask this, because you're talking about the filing season, because this was a conversation that we've had the last 2 years around, right, what is the definition of the filing season and is there a postponement of deadline? So, I mean, it seems like there's not really a conversation around that happening right now, but, we're still a couple of weeks out, maybe a little less than a month out on the April 15th deadline. So any conversations around that, or do you see any movement there this year?
Okay, so the movement of the filing deadline, let me start by telling you, it is highly controversial even within our membership. There are people who just, in their minds, moving and postponing the filing deadline is just dragging out the misery and making it for the most horrible filing season ever, which people have already said is the case. While there are others who absolutely feel the filing deadline needs to be moved. Right now, given the exact current circumstances, the AICPA is not pushing for postponement of that filing deadline. Having said that, we're monitoring it. I can also tell you that there is zero interest on the IRS's treasuries and even on the Hill's perspective of moving that filing deadline. To move the filing deadline will create more problems. As you're aware, the IRS hasn't implemented the postponement of the filing deadlines effectively, which is where we're seeing a lot of these erroneous notices and a lot of problems that have arisen from it. So it's kind of be careful what you ask for, because if you do get it, it can create more problems. And that's really a big concern for us is, yeah, it's a third filing season that's bad. What's going to happen next year if it doesn't get resolved now?
Yeah. No, that's a great point. And again, going back to, I think that's what I like about those recommendations is they are really at the source of the issue versus kind of continuing and perhaps that would, while again, I get the controversy too. And I've had numerous conversations with people on both sides of the aisle and, each is right from their perspective. But it's, thinking about the long term and how do we not make the next filing season, another rough one. So I guess based off of kind of where we are and what we've seen, based on the recommendations, are there specific actions maybe that you're hoping to see or that the coalition's hoping to see based on those that have been taken so far, I guess, by the IRS?
We really are looking to see those other 3 recommendations
Yeah.
take into effect. It really, some of them are just, they just make sense. And some of them are actually their policy. So it's a matter of there's a breakdown in the system. They need to figure it out. One thing too about those recommendations, yeah, we get it. The IRS doesn't want to have to implement it. Yes, there's a lot of work associated with this, but right now, given what we're going through, it's needed. And, I've also heard a lot of people saying, well, the manpower, the resources it takes to implement this. I really struggle to believe that amount of manpower is more than clearing this backlog in the current situation that we're in. So it's kind of like you have to balance it and you need to take action. And any action now would be appreciated because it will help.
Yeah. Do you think, because obviously, maybe not obviously, but it was about a week or 2 ago that there was the announcement that there's going to be some additional hiring being done. Do you think that, and again, maybe at the eye of being able to kind of reduce some of the backlog and maybe going forward and get us set up for a successful tax season going forward, do you think that will help? Is that enough? What's the thought there, I guess? Yeah.
Do I think it'll help? Yes. Everything helps right now.
Sure.
And we need
Yeah.
everything, every little piece of it. But you've got to understand, the IRS has talked about the surge team. And the surge team, my information tells me that the first surge team is supposed to tackle about 600,000 pieces of the backlog. But when you're talking a 23 million backlog, it doesn't put a dent into it, right?
Yeah.
And they've also done talks of, a second surge team. They've also talked about extending the overtime, the 10,000 people being hired. Once again, everything helps and we need everything. And that's why every single one of these recommendations, take them, do them, implement them, because it will overall help. But the 10,000 hires, our understanding from the IRS, if you look at Aaron Collins' report, it can take up to 9 months for them to hire, train, and implement someone. I know that the IRS has, I can't remember what it's called. I think it's called direct hire, where they can quickly do it. Yes, that does help, but we won't see the effects for another 3 months, even with that ability for them. And once again, I can't stress that we need help now. We need to start it as soon as possible to start getting behind this, or in front of it, I guess is a better way to say it, so that next year we can see some light at the end of that tunnel.
Yeah. No, I even think about it from like the people perspective in the profession, working as a tax professional, that I've heard that from numerous people coming into the industry about like, oh, this seems so difficult and challenging. It'd be nice to just kind of have like a normal, whatever normal tax season is, and I think some are actually looking forward to this year from that perspective of saying, well, at least maybe the deadlines won't move on us and that sort of thing. So there is sort of that sense, even from the tax practitioner community, right. I'll say from my perspective as well. So, but actually I have a question, and I guess the audience members here too, if, feel free to get your questions in as well. But a question that I had come along for you, Melanie, was around what should you do if you have somebody, if you're working with a client, this is a tax practitioner asking the question that, is basically just waiting. It was an amended return that was filed, the timeline, the markers kind of keep getting pushed out because the IRS just hasn't been able to get to it. What's your take, or what would you suggest or recommend as a best practice for those that are in that situation and trying to help taxpayers, resolve the situation, but just also sort of being at the mercy of the backlog, so to speak?
I dislike that question because I don't have a good answer.
Yeah, no, that's a tricky one. I'll acknowledge that for sure.
and really, and I hate to say this because the IRS is always telling people, have patience. Uh-huh. But when you have a client who needs that money, or they have a notice lingering over the head to tell them, oh, it's okay, just have some patience, that doesn't work. That doesn't work with the client. And right. So I don't have a great answer, have patience, but I hate that. I feel like that's nails on a chalkboard telling someone to have patience with this. And also with the notices, the IRS, the ones that they did stop, and they say, oh, if it's an erroneous notice, you don't have to do anything. I struggle with that too, because I'd like to find the practitioner who has zero problems telling the client, don't worry about it, we're going to do nothing, and not submit an amended return or submit a second follow-up return and not do anything about it. And what can you do in these circumstances? And the only piece of advice is Communication is key with the client, getting them to understand the situation up front and through the process, I think is the best that you can do and hope for the best. But there's just not a good answer.
There's not a good answer, right? No, but I appreciate that. I think communication is a great piece of advice there. If you're, I guess, thinking about the messaging to taxpayers around that too, certainly I think some of the announcements and things coming out of the like the taxpayer advocate and the reports there definitely help to be able to point to say, like, there is a real issue here. Are there any talking points that you'd recommend for practitioners and or things to communicate to taxpayers that maybe would help with those types of situations?
I don't believe we have specific talking points to give out to people, and it's between each person and their client.
Yeah.
But just stressing to them, have patience, stressing to them that you really are trying everything you can, that the ability to reach out to the IRS is difficult. But I have to tell you, it falls on a lot of deaf ears. And I've had members tell me, I had one person tell me that her client came to her and she says, well, I'm going to find a tax attorney who will help me. And the member said, okay, what can you do? And the client went to a tax attorney, and the tax attorney told them the exact same thing, that they're unable to get through to the IRS, that they need to be patient, and it's going to take time. And the person came back to the practitioner and said, okay, yeah, you're right. And we'll stay with you. So it's hard. Those talking points are hard because they're not something the taxpayer wants to hear. And no matter how much you prep them, it can fall on deaf ears.
Certainly. Yeah, no, but I guess it's also your story there is even encouraging, right? Because I think sometimes as a tax practitioner, you feel like, well, am I missing something? Or is there something I didn't think of that we could have done to help? And, the answer sometimes just is, no. Like you tried everything, and so maybe gives some confidence to tax practitioners, I suppose.
Right.
Yeah. Anything else that we haven't mentioned so far that you'd add to the conversation around some of the recommendations and the work that the coalition is doing? Maybe even how somebody that's interested in helping can support the coalition?
So we do tell people to reach out to the members of Congress, that they need to have that voice, make others aware of it. We have been very vocal. So the more vocal people are, the better. And that is definitely something that we encourage people to do. We do appreciate what the IRS has done. We do appreciate the situation that they're in. But we also think more can be done. And the biggest concern and the biggest thing for me is, we don't want to enter a fourth filing season under these circumstances. So we will keep pushing, and we appreciate that people are pushing too.
Yeah. Well, I just want to say thank you. Thank you for all you're doing. Because I mean, it even if it's just moving the needle a little bit, it's moving the needle, and it's progress towards, improving things for the future. And so I appreciate the work that you're doing, the AICPA is doing, the coalition's doing. So I would be remiss if I didn't say that a couple times here.
Thank you.
I
appreciate it.
But we'll circle back and get your final takeaways. But let's jump over and get Tad's takes for this week. So Tad, the question I always like to ask you, whether we're on these sessions or just in general, is what's on your mind and what's your take on the situation. So Tad, what's going on? What's on your mind today?
Not a whole lot, honestly. From, I guess, when we last spoke 3-4 weeks ago, there has not been a lot of movement with really anything in terms of legislation or the like. We've had a couple of silly bills, get kind of passed. If you read our From the Hill column, you could see a couple of them in there. One was the IRS Return to Work program, where they're going to force IRS workers to work overtime and to not work from home and those type of things, so the backlog gets cleared. There's another SALT legislation out there, which we've seen those so many times before. And again, the two that we actually are kind of watching, one, because we would really love to get the damn thing passed, is the extension of the retention credits to the fourth quarter of 2021. Interestingly, one of the representatives at the oversight hearing last week, that Commissioner Reddig was testifying in front of, they each have like a 5-minute allotment of time. And this lady took a pretty good section of her time to push for that legislation. She had sponsored it. The House bill, remember there's identical bills in the House and the Senate right now for extending that. So she took the time there to push that. So there, that one I don't think is 100% dead yet. If you saw our retention credit webinar last week, the internal one that we did, I think that this thing may be coming for a bit of a showdown with some of the employers that are claiming the credits under the governmental order provision. I think there's going to be a showdown. I think it's going to happen between the service and taxpayers at some point. Hopefully that will not damage the ability to get this thing to the fourth quarter. The other one that's out there that I think actually will probably later in the year, as they usually do, is the extender legislation. I mean, there's a number of things out there that have expired, are expiring. That there's been some groundswell of support for. The R&D credit thing, the deduction has been a big deal. It's been a big deal since it expired, but that's one of them. We've got bonus depreciation that's going to get scaled back here in 2023. So there is some talk about extending that to keep the 100% write-off. So a couple things out there and a couple of silly things out there that are pretty much just for political posturing. So, but right now I think the House is not in session this week, I believe, and the Senate's really more captivated with the Supreme Court hearings that are going on back there. So not much this week.
Not much from a tax perspective, which I guess is maybe a relief from where we were at the end of last year when there was sort of that flurry that we were watching. Obviously didn't come to fruition, but there's certainly been a lot of back and forth and conversations around that. So
yeah, I think the one that probably made Commissioner Reddig shudder a little bit, and probably Melanie as well, is the proposal that somebody had thrown out there about sending gas cards out to taxpayers, and the IRS was going to administer that. That's what they need, is one more program to administer during this time period. So I think that got shut down pretty quickly, not because people didn't think that maybe gas cards were a good idea, but they don't need to have the IRS administrator trying to distribute gas cards to taxpayers.
Yeah, maybe the line should be something along the lines of maybe there's not enough gas in the tank already for them to do that. Some sort of a dad pun there, or joke or something, I guess. But yeah, that definitely there's been a lot that the IRS has done that's outside of the normal in the last couple of years here. With
I don't know if Melanie, if she watched the hearing last week, but I got to tell you, I was pretty impressed with Commissioner Reddig. I mean, how he just kind of held his patience, because they were going to lambast him in any way that they could. But I thought he did a really good job of just maintaining his composure and not reaching back out and lashing out at those people. But I did notice that he spoke I think yesterday to the Tax Executives Institute. They're having a conference, I think, in DC. He spoke there. The quotes that I saw coming back from there, and I don't know if if anybody else saw those, but he seemed to be walking back a little bit, his ability to get the backlog down to 1 million by the end of the year. So, hopefully he hasn't discovered something that he wasn't aware of before. But I thought that was pretty brazen when he said he could get the 22 or 23 million down to 1 million by the end of the year by just hiring people who, like, we've talked about, you have to train these people. So a lot of takes time. You're right.
And he does have to have thick skin. We'll say that for his position. So
the other thing is he is a lame duck, member. So, and I'm not sure that he really cared, to be, like politically correct to these people, but, he stood his ground with them. So, yeah.
Well, let's kind of go around and just get your last thoughts to leave everybody with for today. I guess, Melanie, a question I usually like to ask, kind of wrapping up, is what's on your mind for the week ahead, or the coming weeks ahead? What are you watching for these next couple of weeks, kind of maybe relative to some of these service challenges and the recommendations?
I'm hoping that the IRS will announce something else, and that they will come forward with at least one more area of relief. We've heard rumors coming through, so we're watching for it. We're hoping that something comes for it. And, once again, the devil's in the detail. So we'll be paying attention.
Well, hopefully, I think that would be very welcomed from my perspective, at the very least. So, all right, Ted, how about you? What are you watching here as we head into the next couple of weeks here?
Yeah, I mean, nothing really kind of jumps out at me at this point in time. I think everybody's pretty much heads down at this point, just trying to get some returns done and things like that. So again, I do hope that, something does come out there that is a blanket, penalty relief or blanket, something like that, that I really think would benefit the taxpayers and benefit the IRS as well. I think one of the questions that was asked at that oversight hearing by, I think it was Representative Miller again, is why the service, she was on her retention credit high horse, and why she was just asking why the service, couldn't prioritize the retention credit claims. And, rather curt answer, I think Commissioner Reddig said something like, we can't see through the envelopes to know what's in them. So I thought that was pretty good.
Yeah. Some of the challenges that come with processing and backlogs, I suppose, right?
Right.
Again, I want to thank you both. I always appreciate, and that's one of the best parts about being able to kind of host these conversations is just getting some great insights. I always feel like I walk away from them with something, and this conversation definitely did not disappoint in that regard. So again, thank you both. We'll put contact information for both Tad and Melanie in the comment section below, in the detail there. So please reach out if you have questions for either of them. Great resources, and I guess get involved if you want to support the efforts of the coalition there, right? So, all right. Well, we're gonna be back on April 5th. We'll be doing 2 weeks. It'll be a little about 2 weeks to the individual tax deadline. So we'll be talking about some of the things that individuals need to be thinking about, maybe some investment highlights and the like. So mark your calendars. Hit subscribe if you haven't already, so you kind of know that it's coming. But I guess until then, have a great week, and thank you for watching.